Welcome back to watching Business Incorporated live from Channels HQ. To our next conversation now, with about 100 million MSMEs in Africa and Nigeria boasting about 42 million. How the digital lending platforms managing to serve with rate hikes and banking sector liquidity issues? Let's talk to Laureen Nabuko-Haney now, CEO and co-founder of Fair Money. Join us via Zoom in Paris. Great to have you.
Yeah, hey Larry, good to meet you. Thank you.
So yeah, with the recent rate hikes, that started last year. Now we got the ECB yesterday raising by 50 basis points. Expectations that the Fed would also raise again. We don't know by how much, maybe 25 or 50. How's this impacting, digital lending platforms in Africa?
Yeah, I think for our case, I would largely speak for Nigeria now. So you'd see that, of course, the Fed and the ECB increasing their rates has a direct impact on lenders. We at Fair Money, we are mainly or only focused on the Nigerian markets, and here also we've seen several interest rate hikes. Now, to understand the impact that interest rate hikes have on lenders, digital lenders, or even banks, it's important to understand what that does to an economy. So if the interest rate is increased by the central bank, what you'd see as a direct impact of that is that prices increase, right? So we've seen in Nigeria prices increase, and prices increase basically across board. Everything is getting more expensive. What that does is, if things are getting more expensive, the average consumer has less money, more pressure exists on the average spending habit that the customer has. So the average consumer has less money. If the average consumer has less money, it does two things. So of course, as a lender, that might lead to increased demand for credit. But on the other hand, it also creates more pressure on the on the financial health that the customer has. So it really has a variety of impacts. On the one hand, you really need to manage your risk much better. And that is in Nigeria, that is across Africa, that is even in the US. In the US, for example, we've seen that credit card defaults have been on the rise since the Fed has increased the rates. In Nigeria, I've seen that much less yet. But on the other hand, it also means opportunity. If you provide a responsible credit solution for customers, now might be the time that the customer needs support on their cash flow. And that is really across retail, and that is also across the SME sector. So when we think at Fair Money, when we think about interest rate increases, we really think of it as number one, a challenge for our risk management strategies. We need to be on top of it. We need to understand that there's pressure on the average consumer. But on the other hand, it also means opportunity as the consumer on the retail end or the SME customer might need more support from its bank, from banks like us, to provide them with cash flow solutions.
And talking about pressure to the consumer, the arguments that the digital lending platforms have really, really high rates, and I'm wondering, will there be a point or a time where the digital lenders, their rates are actually quite affordable?
Yeah, no, it's a good question. I'd say though, so, from having a good overview of the market in the last couple of years, you'd see that bigger players in the digital lending space, and that is across Nigeria, but also across Africa and even beyond. What we see nowadays is that if you want to be competitive as a lender, right, and if you don't want adverse selection, and you don't want adverse selection as a lender, what you need to do is you need to decrease your price over time. So you really need to be able to provide the customer with competitive rates. If the customer have competitive rates, you start referring you, he will pay you better, or she will pay you better. And that is really what we're seeing. The higher the rates, potentially the more the adverse selection is too. So any good lender or any large lender has a very strong incentive, to work on rates and decrease rates over time in order to attract a lower risk population. And clearly we've seen that, and we've seen that for Fair Money, we've seen that for other lenders. The overall trend in the industry is actually a decrease in rates as underwriting gets more sophisticated, as it gets more competitive, as lenders are competing for the lower risk customers. But yes, of course, you also need to, as a lender, you also need to see the environment that you're operating in, and interest rates, and sort of what the central bank does has a direct impact on interest rates. Yeah, we can't deny that.
And what would you say is the impact of digital lending, platforms, on MSMEs right here in Nigeria?
Yeah, I mean, look, it's huge, right? I think so. Maybe to take a step back, what we're trying to achieve at Fair Money is really we're trying to rebuild and build Africa's money story. So we are trying to impact and write the story about money in Africa, how people are thinking about Africa, and how people are thinking about Nigeria. And we want people outside of Africa to think about Africa when it's about financial innovation, financial service innovation, fintech. And how advanced we are in dealing with money and spending money in products that help us manage our money. And I think Nigeria is really at the forefront today, and the average consumer can feel it, right? And let me give you a few examples. So if you today look at the, specific about the credit business, but I'll talk about the payments business after. If you look today at the different players that are giving credit in the society in Nigeria, and if you look really at the number of credit facilities that are today given by digital lenders, it's huge actually. So I mean, for Fair Money, in terms of numbers of credit facilities, we are number 4 in Nigeria now compared with all other banks. So you'd see we've reached some scale, and a few other digital players are also on the rise. So you can see that the way and the transformation which we're in. I think it's a very, very big transformation, and the average consumer in Nigeria can feel it. Can use products like Fair Money in their daily lives and borrow from us, but also make payments with us, use our debit card product, and so on and so forth. So that's really on the sort of banking side. If you talk about payments specifically, and I'm sure you guys spoke here on Channel TV about this. The payments space is quite large, and it includes, for example, online payments. When today you can make a payment with your card online, you can order things, you can pay things, and that is all with the payment infrastructure that has been developed over time. You can use an agent bank, you can pay with your debit card in a store. All of those payments that the retail customer makes today, they're all riding on part of this technology that were developed over the last 5 to 10 years. So I'd say technology in Nigeria helps to make the average person's life better, more efficient, cheaper. And yeah, it helps us to rewrite a bit the way people think about Nigeria and Africa as a whole. And there's a big opportunity for us to be at the forefront of innovation today and in the next couple of years.
All right, before I let you go now, looking at, that whole industry, what kind of, innovations, can we expect, partnerships to, get the rates cheaper, get more MSMEs, supported, and, just, build that industry to be more resilient, going forward?
Yeah, I mean, I think that what we are going to see, and we've started to see that recently, is definitely two things. Of course, continued innovation, building new products, but also we'd see companies joining forces. So, for example, Fair Money, we just bought one of the larger merchant acquirers in Nigeria. So a business called Payforce, they help the smaller merchants to accept payments. And make the life of the average business person in Nigeria simpler, easier, and help them basically to make money, manage their money better. And this kind of consolidation we'll see a lot. I think as the ecosystem will mature, the bigger players will start to merge with the smaller players, and all of that, in my opinion, I'm very convinced by that, is going to help the end consumer and the small businesses, to manage money easier, manage money better, save money, and really enjoy the fruits of this innovation wave that we're currently riding on. The end benefit, the person benefiting in the end is always going to be the end consumer, and small and medium enterprise in Nigeria.
All right, let's hope the rates get more affordable as time goes on. Thank you so much, Lauren Haney, CEO and co-founder of Fair Money. Thank you so much.
Thanks, Ali. Thanks.